this is your boy. Welcome to our course on Forex Trading. This is like a continuation of our part 6 tutorial. So this is the part 7 of the tutorial. Last time we treated ascending triangles, we treated symmetric triangle, and then now we're coming to treat descending triangle. Now, as you probably guessed, descending triangles are the exact opposite of ascending triangles. Now we knew you were smart. Now in descending triangles there is a string of a lower highs from the lower highs, which forms the support, or which forms the upper lines, as you could see over here, which forms the upper line, and the lower lines is support level in which the price cannot seem to break here, and then we're just showing you the diagram. This is the support line or level here. Price can't seem to break this level, and then in this chart above, or in this chart here, you can see that the price is gradually making lower highs and telling us that the seller are starting to gain some ground against the buyers. And now most of the time, and we did say the price will eventually break the support and then make its way down there or continue to fall. Then however, in some cases the support lines the support line is too strong, and the price will bounce off it and make a strong move upward. And the good news is that we don't care whether or where the price goes. We just know that it's about to go somewhere. Whichever direction the market goes, we are ready for it. Now in this case, we would place entry order above the support lines, and then the lower highs and below the support lines. Now you could see over here, let's just quickly flip to the next page. You could see over here the market broke the support level and then made its way down. Why? Now, to every forex trader out there, this is a downtrend movement. Now, how are we able to spot how are we able to identify that this is a descending triangle? Now this is a downtrend movement, and then through our technical analysis, we're able to scale up or come up with an idea of being able to explain whichever direction this market will go next. Okay, so here, as you can see over here, say price finally breaks support, the seller wins the battle here. Price broke the support here and the sellers are in profit. Now in this case, the price did not end up breaking this. The price end up breaking the support lines and proceed to drop rather quickly. Now the market tends to fall faster than it rises, which means that you usually make money faster, or you make money faster when you are short. Yeah, you make money faster when you're short. And then we're also going to be treating double tops. Now what is a double top? A double top is a reversal pattern that is formed after there is an extended move up. This is how it works. It forms after an extended move up. Now the tops are peaks which are formed when the price hits a certain level that can't be broken. After hitting the level, the price will bounce off it slightly, but then return back to the test, or return back to test the level again. If the price bounces off that level again, then you have a double top. As you could see over here, the price bounced here first and then again came back the second time to bounce again, and this is where the name double tops comes from. And then here you see previous uptrend, and then we're also going to be looking at the same double top, but then where a breakout happened. In this case, a breakout happened in this chart. You can see that two peaks or tops were formed after a strong move up. Notice how the second top was not able to break the highs of the first top. Now this is a strong sign that a reversal is going to occur, because it is telling us that the buyers or the buying pressure is just about to finish. That is what it's explaining. Now without double tops, we would place our entry order below the neckline, because we are anticipating a reversal of the uptrend. So here there is where you get the word double tops, and then this is, you say here, you say price breaks the neckline and continues to move down. Here a lot of traders like you and I, we made some huge profits over here. But one thing you need to understand is that there's a need to actually know how to make an interpretation of these chart patterns. If you don't know how to interpret these chart patterns, you may not get it right when trading. So that's why we are actually projecting these chart patterns, so you actually know what you're doing, so you don't make some unwanted mistakes when you're supposed to be making some good profits that will put some smiles on your face and so much more. Now in this case, if this is your first time of seeing us on YouTube, if this is your first time of going through our training, you might just look underneath the description. There you get the part 1, 2, 3, 4, 5, 6 of this same tutorial, so you get to follow up with what's going on from the kindergarten level to this stage. Alright guys, so if this is your first time again, I acknowledge that you please hit on the subscribe button, that of the bell icon. Send us message on what you want us to improve on. I also like you to share this tutorial to friends. You might just want to share it on Facebook, or share. Bro, I want you guys to say something. Alright guys, I love you. Just in case this is your first time again, my name is Toby. I'm from Forex Street Academy. And also we're going to be looking at heads and shoulders. Now a head and shoulder pattern is also a trend reversal formation. It is formed by a peaks, shoulders, by a peaks, now followed by a higher peaks, heads, and then another lower peaks, and then a neckline. Now it's drawn by connecting the lows, and it's drawn by connecting the lowest point of the two truths, which is connecting the two truths, connecting the lower points of the two truths, or the lower peaks or the necklines, connecting the lower points of the two truths. So you just get to know how to scale up this in your system and in your phone. Now the slope of these lines can either be up or down. Now in my experience, when the slope is down, it produces a more valuable signal. Okay, and then in this example we can easily see how the head and shoulder pattern. Now the head in this second peak, or in this, the head is the second peak, and then is the highest point in the pattern. Now the two shoulders also forms peak, but do not exceed the height of the head. Okay, now with this formation we look to make an entry order below the neckline. Here below the neckline, an entry order below the neck lines. Okay, so why are we doing that? Now we can also calculate a target by measuring the high points of the head to the neckline. This distance is approximately how far the price will move from, or the price will move after it breaks the neckline. Okay, so this actually is what we are going to be doing. Then we just trying to check what happened actually to know what the market turned out to become after some hours probably, or after some days. So here you see that the price breaks the neckline and makes a nice move down here. The price broke the neckline and then makes a down move down. It makes a down move here. So you can see that once the price goes below the neckline, it makes a move that is about the size of the distance between the head and the shoulder, as you could see over here. So the price made the same equal move that is the same height with this. It made same equal move down here before anything else happens. So also we're going to be discussing reversed head and shoulders. So in this case, reversed head and shoulders, we're going to talk about it, about this, and then but after then we're also going to be looking at some facts that makes forex traders very powerful in this system, in this world of trading. Alright guys, so just in case again you've not subscribed to our YouTube channel, you might just want to hit on the subscribe button and the bell icon so as to get notified whenever we get something up on the YouTube again. Alright, so please reversal heads and shoulders. How does reversal heads and shoulders? Now the name speaks for itself. This name speaks for itself. It is basically a head and shoulder formation, except this time it's in a reverse. Okay, in reverse, a valley is formed. In this reverse, a valley is formed. Now shoulder, now followed by an even lower valley, which is the head, and then another higher valley, which is the shoulder. Now this formation occurs after extended downward movement. Okay, it occurs after extended downward movement. You could see the neckline here, and then here you see, or you can see what this is, just like a head and shoulder pattern, but it's flipped upside down. With this information we would place a long entry order, a long entry order above the neckline. Our target is to calculate, our target is calculated just like the head and shoulders pattern. Measure the distance between the head and the neckline. Over here, the head and the neckline, the distance between here and the neckline here is a measure the distance between the head and the neckline, and that is approximately the distance that the price will move after it breaks the neckline. So over here we also just want to flip to the next page to see what happened. Now the markets travel the same distance from the head to the neckline here. Now let's say, okay, travel from here again to this place, and then from here there's actually going to be some strange move for which we don't know whether the market will continue diving, we continue traveling to the up there, or better still bounce back to the neckline. But in this case you can see that the price moved up nicely after it breaks, or after it broke the neckline. Now we know you are thinking to yourself now that the price kept moving even after it reached the target. Okay, so and our response to this, don't be greedy. Now in this case, the reason I say don't be greedy is because there are some of the traders out there. Now they know very well that after a breakout happens, if a breakout happens eventually and at this level, that the market is supposed to travel just from this level, from the head here to the neckline. That is the distance the market is supposed to travel. But then some other guys out there is going to, maybe after the market has traveled distance, they're just going to be like, okay, let me just leave it for some time, and then the market starts behaving funny. You find out that most of the profits you made has actually been cut off, or has actually been cut short. So that's why I say don't be greedy. Now if your target hits, please guys, then be happy with your profit. However, there are strategies where you can lock in some profit actually and